Good morning, ladies and gentlemen. The approach towards quarterly earnings continues. We get you the best ones in town, and to discuss the way forward where managements are seeing green shoots and where could there be further problems ahead. To discuss this, as far as quarterlies are concerned, we are joined by the management of mid-sized Birlasoft Limited. Mr. Angan Guha, Chairman Managing Director, joins us to discuss how the performance has been. You will see a lot of data alongside you. Net profit for the quarter gone by surged 23% to 120 crores versus 117 a year ago and 116 crores in the sequential quarter gone by. Sales were flat and you have a smart surge in EBIT as well. Namaste, Mr. Guha. A very warm welcome. First off, what was the reason for this very sharp rise in profit but flat sales, and how much did Birlasoft put aside or had low profits because of new labor laws?
Shailendra, thank you for having me on your show. Really appreciate it. From our revenue perspective, as you have rightly stated, for the last 2 or 3 quarters, we've had flat revenue growth. Now, this quarter, again, dollar terms, we are flat. Rupee terms, we have grown 1.4% sequentially, quarter on quarter, rupee revenue growth. Margins has been an exceptional performance, and I'm really proud of the team. They've come together, executed well. We've operationally improved. We have kept our expenses under control. We've also taken a lot of cost out. And of course, the currency has also helped us in a meaningful way. So all in all, we've been able to deliver about 18.2% EBITDA. If you remember 2 quarters ago, we were at 12% EBITDA. So clearly, we've executed very well. But as I have said, there is also a tailwind from the currency movement. So if I were to take those one-offs out, our stable EBITDA margins are between the 15 to 16% range, and operationally will improve from there on. As far as the labor code is concerned, we've as we have stated in our earnings, we've kept about 41 crores odd in terms of provision for the labor code, and we will now see going forward in terms of how to tackle that. So all in all, a good performance on margins, but like you rightly pointed out, we have to do a lot more on order book. We have to do a lot more on revenue growth.
Okay, fair point. Give us some granular feedback, Mr. Guha. What have clients been telling you? Have Indian-oriented expenses or quantum of funds to be spent on IT improvement increased over the last 6 months or so, or are we still under the cloud of AI?
So, look, Shailendra, my sense is the demand environment has not really meaningfully changed, right? It is pretty much the same as it was maybe 2 quarters ago or 1 quarter ago. The uncertainty still persists. The kind of tariffs that are happening on our clients continue to bother them. So from that perspective, I don't think meaningfully the sentiment on the ground has really changed. Now, as far as tech spending is concerned, I still continue to feel there'll be a lot of deals on the table which will be cost takeout deals, because there will be consolidation. There will be a lot of clients who would come to the table in order to save costs. So those kind of deals will continue. AI is pretty real. I mean, every conversation that we are having with our clients, we have an AI component, either in the way we deliver or even in the pitches and the proposals that we make. Customers will continue to spend a lot more on AI, though I will also say that the kind of benefits the customers were expecting thanks to implementing AI, I don't see those benefits playing out yet. Now, of course, the future could be different, but for now, the benefits of the AI are yet to be seen.
Mr. Guha, please also give us some feedback on how your workforce has moved sequentially as well as year on year. I believe a lot of appointment letters are on hold as far as the broader industry is concerned domestically. What has been the experience at Birlasoft?
So, Shailendra, we are continuing to invest in our business. Now, we are not laying off any people, if that was the question. We are hiring. In fact, we are hiring people for capability. We are hiring people in sales. We are hiring people, in our service line. So, hiring continues. Now, as far as billable headcount is concerned, you will see billable headcount to be soft or it will be down a little bit, and that is thanks to the productivity that we are driving. One of our stated intent, Shailendra, is to walk away from any staff aug work, right? We will definitely do work with our clients on a time and material commercial vehicle. That is fine. But pure play staff aug work is something that we do not want to work in. We are doing a lot of outcome based work for our clients, and typically in outcome based, headcount is irrelevant. It is how do you use AI, including people, to deliver a good outcome for our clients, and we are focused on that.
That's a fair point. Any potholes, any hurdles, any pain points you encountered in the quarter gone by?
Not really. I mean, in terms of the uncertainty still continues, if we can call that as a pothole, that definitely is there and it will continue going forward. But operationally, I think we've done a good job. I think we've operationally significantly improved. That shows up in our margins. I think the bad news is behind us, and I feel reasonably, cautiously optimistic about the market. Of course, a lot of execution rigor needs to continue. We need to focus on creating more pipeline. We have to focus on driving more deals, and the revenues will come. So as a management team, going forward, our entire focus, whether it is 4Q or 1Q of next year, is to create pipeline and deliver a strong order book.
What's the order book at this point of time, Mr. Guha? How much did you add to it in the months gone by? And where do you see it for calendar 20? Where do you see it for fiscal 2026?
So look, we don't typically give guidance. I mean, as you know, for the first half year, we had booked about $247 million worth of orders. Q3 was exceptionally good. Q3 alone, we booked about 202. So all in all, we are at about that $450 million worth of order book as far as 9 months is concerned. Now, I inherently feel 4Q from an order book perspective will be better than better than 3Q. So I'm feeling confident, but suffice to say that we need to do a lot more on generating funnel and closing orders.
What has been the feedback from your top 10 clients in terms of revenue contribution? Has there been a change in the ranking in the quarter gone by?
Not really. Our top 5, top 10, and top 20 clients continue to grow. We are doing well there. I think we've also done a lot in terms of rationalizing our tail clients, and we are pretty much done with it. Today, we serve about 230 odd clients. Now, we will obviously not rationalize anymore. I think that is the right size. But equally, Shailendra, there is a lot of work to be done to expand our real estate, right? As you know, our top 40 clients or top 50 clients contribute almost 90% of our business. So technically, we have 200 more clients with whom we have MSAs that we can really mine and grow with. And that is the entire endeavor of the management team over the next 4, 5, 6 quarters.
Okay. In terms of how attrition has moved, what are your thoughts? What's the percentage attrition in the quarter gone by?
So, Shailendra, our attrition is 13.1%, which we have declared. It is holding steady for the last 3 or 4 quarters. I think even in 4Q, it will be in that range. I don't see a meaningful shift in attrition. But look, we have also declared that we will give a salary revision in the next quarter, 1Q and 2Q, for certain leaders in 1Q, certain leaders in 2Q based on the grade. We've also announced a promotion cycle in in the current quarter. So we're investing in our people. I feel that will have a lot of leverage in terms of attracting and keeping our workforce. And as I've said, that we are moving away from pure staff aug work to more managed outcome and managed services work. I think that will also be very attractive to our workforce. So I inherently feel that maintaining the attrition at that 13-14% level is definitely a doable thing.
Okay, fair point. Mr. Guha, as always, it's a pleasure to talk to you. And this time, I think we've touched base maybe after 18 months or so. Here's wishing you all the best and wishing that you come more often on Business Today Television. Have a nice day, sir. And I believe you're headed overseas. So a great trip ahead.
Thank you so much, Shalin. Thank you.
That, ladies and gentlemen, was Mr. Guha, Managing Director at Birlasoft Limited. More and more is happening on Business Today Television. Please stay tuned to the other side of the break as well.